The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
S&P's up by 15 points right now. We take a look at the volume. And yeah, how about that volume right there? You're talking about 857,000 contracts on the S&P yesterday. That volume, okay, comparatively to where we were on June 9th. On June 9th, 843,000 contracts, 857. That is the lowest volume day you're talking about, I believe, all year. As in, you have the 843, the 857. These are the two of the lowest volume days that we have. Not exactly how you want to see it plow higher, but even the prior 2 days, right? Tuesday, you accelerate higher, but that was the least volume you had in the last week. You do it on less volume on Wednesday and even less volume yesterday. Now, doesn't mean the market has to pull back. I had a great conversation with Teddy Kegstad yesterday. He's talking about, July 4th, right? Yeah, we're coming into July 4th, man. It's Thursday right now. Tomorrow's Friday. Next week might as well be a 3-day work week. Okay, work week. Thursday, we get a half day. Closed at 1 o'clock in the markets on Thursday. And so what happens, right? Well, we get 3 days of trading, but realistically, man, everyone's off to Cape Cod, the Hamptons, wherever you're going, in Florida or the likes. And so, yeah, you may just see that volume trail off. And maybe we trail right into July 4th. Very possible, even as you see this market trading higher with very thin volume on the S&Ps. Now, not as pronounced on the NASDAQ, okay? Still lower, but not as pronounced. As in, you're dealing with a number on the NASDAQ, 390,000 contracts, just above the 352 that I had highlighted on this chart for some time on June 9th. That was a very, very low volume day. I think that was the lowest volume day of the year as well. So low volume day, but as you see, right? Lighter volume, lighter volume, lighter volume on yesterday. And we'll see if this market can plow higher. We got all-time highs, man. Remarkable. You're talking about on S&P, 22,585 all-time highs. S&P, that was a NASDAQ. S&P, 6170 was your high print there. Now you take a look at the Dow. We're still good 2,000 points off the highs in the Dow. On a daily basis on the Dow, yeah, quite a drop-off yesterday. Right, Dow actually rolls over a little negative, but light volume days yesterday. And Russell, positive by 6. Russell, talking about 300-plus points away from its all-time high. Different story. Russell continues to underperform on a longer-term basis. Bitcoin, down $700 this morning. You jump over to crude. Now, that's quite a daily chart. You take a look at crude. Just in the last few minutes when I came on the air, right? Crude, we just spiked, from 5 a.m., but right where we were at 9 o'clock. You spiked 50 cents. We're back to where we were at about 3 a.m. this morning. Nonetheless, crude up by 65 pennies. Now, let's jump over to yields. The dollar again. Dollar's one of the stories right now, to put it lightly, right? So we got the 10-year right now. We're talking about a yield of 4.26. How's that? 4.26 on the 10-year. All right, so we got lower yield on the 10-year, and you look at this 10-year, man. This area we're breaking above here, which is like 111.5. We're now approaching 112, okay? And yes, we had a high in May of 112.20. You got the spike high in April around the tariffs, almost 114, okay? But if, let's just say you take the tariff volatility out of the equation, and it doesn't get taken out of the equation, but you're talking about a technical area right now where December you had a high of 111.20, okay? You have a high of 112.20. In May, we're bumping up against an area that we've rolled over. Now, you put this on a weekly, all right, and again, there's potential to go higher here in terms of higher price, lower yield, and that's what the market is thinking right now. And on the heels of lower yield, we got a weaker dollar, man, and this is a break. So check it out. That's your weekly chart. We hit a 96 handle overnight. We put it back to a daily, and there's your break, man. Dollar breaks to 96.997 last night. We're trading at 97.294 right now on the dollar. You got dollar weakness dramatically. And here's the kicker. We've been talking about it, okay? Gold is negative. I was going to say it's barely positive. It was positive by $4 when I was doing the program this morning. Gold is having some problems, man. And when I say having some problems, folks, I don't mean you're going to tank here. I just mean, dollar is weak, and that is not giving gold the next leg higher. There's no way. Dollar put up a 96 handle today. 96 handle today. Okay, on a longer-term basis, dollar looks to be heading back to 90. There's your longer-term chart, man. We're breaking levels that we have not seen since 2022. And even on that weakness, you got gold consolidating near the highs, 33, 33, 30. How about that? 33, 33, and 30 pennies. Stay tuned, folks. We got a lot to talk about, some economic data to get into, some equities. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks, and we got a lot to jump through this morning. But yeah, how about that gold to finish it up, okay? Now, I've been talking about this for some time. This chart right here, this rectangle that you have on this gold chart from September of last year until about the middle of January, this is the area, okay? And this is what I think is going to happen on the inverse of this, okay? Might as well put a square around this area right here. Watch this. Okay. That's what the dollar did during the same square for gold. Okay? There are your two squares. And the point being, you had the dollar strengthen tremendously, which should have weakened the price of gold. Gold held up extremely well, meaning that priced in other currencies, gold was going through the roof. Okay, you had a 10% appreciation in the value of the dollar, and meanwhile, you could buy the same amount of gold after that period of time. Now, what happened is that when you got the pullback, there was the acceleration, right? You traded from the middle of January at 2,600 to 3,500 in April. That was your pullback. Okay, 2,600 to 3,500. Meanwhile, the dollar dropped from 110 down to middle of April, 98. And here we are, sitting at that 97.26 right now. Don't be surprised if you get the exact same thing on the other side of that, which means don't be surprised if you get dollar weakness here and you get a gold consolidation. Okay, I'm not calling for gold to tank, but I think that even with some weakness here, you might not get that second leg acceleration, just like you didn't get the pullback when gold was facing a strong dollar. You might not get the acceleration. I don't believe you're going to get the acceleration. Okay, because I've been struggling with this many times. I say to myself, okay, I think the dollar's going to 90, folks. Okay? You take a look at this thing on a longer term chart. Let's put a 5-year weekly is the best right now. Just illustrates. You're right in the middle of this move you had from 2021. Okay? From 90 to 115, it was a straight shot. We're the only game in town. We were hiking rates. The dollar was strong. U.S. yields, American exceptionalism, right across the board, yada, yada. We're trading into that area, okay? Next stop is 90 on this chart. That's it. Now, we take even a longer term, and you put it on a monthly, it says the same thing. Very rarely do you get a stop at 95, right? Look at this, 90, 90, 100, 100, 100, 100. All right, maybe you get some chop in there at 95. You have this dramatic pullback in the middle of COVID. Okay, but COVID, remember, COVID hits you at 100. Where do you go to? You double bottom at 90. And look at this monthly chart on the dollar, man. Is that saying that the dollar is going to find a bid here? Are we going to bounce? That chart does not say bounce in any way, folks. 97,251. So keep your eye on some dollar weakness out there, because the charts are screaming it, man. And if you're in that gold contract, okay, I would not bank on dollar weakness yielding dramatic new highs. Now, that doesn't mean that maybe we sit here, we consolidate a bit, okay, but it's been a heck of a run on gold, and gold's going to consolidate a bit itself. Okay, we jump around to some of the economic data this morning. Recurring jobless claims, highest since November 2021. Yeah, that number, 1.97 million. Initial claims decreased to 236,000. Now, initial claims, we're getting data for the week ended June 21st. Continuing claims, 1 week more delayed, June 14th, but you're talking about 2 million. Yeah. And that's the number that you really want to keep your eye on. And then you jump to economic data in terms of trade. Okay, merchandise trade deficit unexpectedly widens on exports drop. Man, there's so much short-term volatility right now in these numbers for these multinational companies that were bringing in commerce, sending out commerce. The shortfall in goods trade grew 11.1% to 96.6 billion. The market was looking for 86.1 billion. How's that? 10% off. It's a mammoth miss. Merchandise exports decreased 5%, 5.2 to 179.2 billion in May, reflecting a sharp decline in shipments of industrial supplies such as oil. Okay, imports little unchanged, right? So you had exports decreasing dramatically, imports unchanged a month after the largest decline on record. In the first quarter, inbound shipments of foreign goods surged as companies, right, pulled those goods ahead of the tariffs that were coming in. The wider May deficit indicates trade may contribute less to second quarter growth than initially anticipated. So they're talking about, right, the bounce back. The first quarter surge in imports, because I was talking about this. Everyone's giving Trump grief, okay, with the GDP. But there was going to be a bounce back because first quarter surge in imports subtracted almost 5% from the GDP calculation. Now, if you consider that you're pulling that data forward, right, what's going to happen later? Well, imports, if you pulled forward the imports, that means that those numbers should decrease in the months following, right? If everybody imported everything they needed for the next 6 months to get ahead of the tariffs, I'm just generalizing, 3, 6, 9, 12 months, when you move forward into those months, they're not going to need to import as much because they already imported it ahead of the tariffs, okay? But that might not be the case because if you look at it, imports were unchanged. So you have exports decreasing now, which could be a dramatic problem as we go forward. Yeah, retail inventories rose 0.3%. And they talk about inventories in here as well, okay? Inventories, 2.6 points to the first quarter GDP, but not nearly enough to make up for the deterioration in the trade balance. So there's some funky stuff going on in these numbers, man. All right, we're going to talk a little Tesla, and we're going to talk a little bit of Google when we come back, because this one's an interesting one. Interesting article from the Journal out here, okay? And I'll give you the headline. Waymo. Yeah. Waymo, $45 billion. When you look at the valuation that is into Tesla on the future of self-driving cars, automated vehicles, along with those automated robots and the likes, Waymo, that might be a huge opportunity. And it's a great article. And you got Google up a couple bucks right now this morning to 173, quite a charge higher. But yeah, Google's got plenty of vehicles, well ahead of what Tesla's doing right now. We'll take a look at those. Tesla, negative $3 right now to 324. And how about NVIDIA, man? We're going to open higher yet again. NVIDIA going to open at all-time highs to 156. We might be pushing $4 trillion pretty soon. Be right back, folks.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn. and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got equities open. You got NVIDIA opening at a record high. 155.54. We hit 156 briefly. We jump over to GDP numbers. Okay, we talked about trade. So, GDP declined at a downwardly revised 0.5% annualized rate in the first quarter as a result. And you're talking about recreation services subtracting 0.14 percentage point from the GDP. And yeah, U.S. consumer spending grew in the first quarter at the weakest pace since the onset of the pandemic. Consumer spending, just a 0.5% pace instead of the previously 1.2. How about that number? All right, we talk a little bit of Fed before we jump over and talk about some Google and some Tesla and some Waymo. So coming down the line, when you're talking about where we are next, right now, July, there's about a 3-to-1 chance the market thinks they're staying where they are. But you get out to September, and things almost reverse. The market's thinking September. Maybe that's enough for Chairman Powell to get his summer data, a couple months. Market's priced in about a 70% chance we get 1 cut. Guess what? There's almost a 22% chance we get 2 cuts in the next 2 meetings. You go out to December, and the market is pricing in 3 cuts by the end of the year right now. Things change so quickly, right? Now, where we are right now, a month ago, they were thinking maybe only a 22% chance we get the 3 cuts. Things, and this is not the holy grail, okay? It moves violently in terms of the swings. But the bottom line is, guess what? Market's pricing in more cuts, man. We get some weak economic data out there. Consumer spending is shrinking. And yeah, U.S. GDP revised lower. Consumers slash recreation spending is the headline out there. Okay, let's jump over and talk a little bit of Google, because it is fascinating. Talked about it yesterday. I mean, Tesla is selling many less vehicles in Europe at a time when the whole industry is growing. Okay, I think their numbers were down 20-something% in Europe year over year. At the same time, the whole sector is growing by 27% or something like that. They're just losing out to competitors, and they can't even keep the same amount of sales when the whole industry is growing at 27%. So what does that say? It's not predicated on their auto sales in Europe, that's for sure. What's it predicated on? Some of the big bets, like robo-taxis, okay? Waymo was last valued at just $45 billion. Google's got so much going on, man, they do. Whether it's YouTube, right? Whether it's Gemini, whether it's Google itself under Alphabet, and then you have Waymo, one of these high-flying bets that they've been making in Google Labs, etc. The robotaxi service for Tesla, okay, has less than 24 vehicles. Just to put in context of where Tesla is, where Waymo is. They're handpicking who is going to be in those vehicles right now. A lot of them are, I think, influencers, right? They want to get the word out. They're Model Y SUVs. The purpose-built Cybercab that they unveiled last year, which is not what they're currently running, okay? This doesn't get talked about enough. The vehicles that they're running are not the ones that they're going to have the Cybercab in. Those aren't going to come off the line until sometime next year. And you know what that means if you're dealing with a timeline within Elon's Tesla. Sometime next year. It's a promotion. They're charging people $4.20 a trip. Why not? They have a safety monitor inside. Okay. And then you compare it, though, to Waymo, right? Now, Tesla still trades at 150 times projected earnings, not revenue, earnings for the next 4 quarters. Well above of any other automaker, as we know, okay? How much of that valuation is based on robotaxis? Well, some people think it's as high as maybe 60% of the estimated valuation of that company. Tesla's just beginning, okay? Waymo started service in Atlanta last week. They're in 5 cities. Over 1,500 vehicles is what they have. They're going to double that fleet by the end of next year. Now, next year, same thing as Tesla. When a tech company like this starts talking about what they're going to do by the end of next year, ooh, can you tell me what the world's going to be like in 18 months, folks? Man, that's far out, okay? Now, Waymo just raised $5.6 billion. I say just raised, okay? Last year. While it's June, a lot's happened. AI's taken over, self-driving vehicles. You know that number is going to be well above $45 billion, okay? 10 most valuable venture-backed companies is what they put it at. Annual revenue, look at this trajectory, right? Waymo's already taken in $2 billion. Yeah. And they're saying maybe around $150 billion in a report last month. Well, guess what? If Tesla, because right now, folks, okay, you're talking about a company, Tesla, that's valued at $1.05 billion. So they're saying even if it's half the company, even if it's 20% of the company, that's $200 billion. Okay? Yeah, and then you go into the fact that Tesla, in terms of the technology they're using itself, Elon Musk shunned the use of self-driving systems that included more expensive LiDAR. Tesla's autonomous system, based on cameras and software, cheaper to deploy, but adds potential for new problems such as cars getting blinded by sunlight. But this one is more about Google and Waymo. Because, yeah, you're in 5 cities. You already have $2 billion in revenue. And you have 1,500 vehicles that are just out there, and there's a bunch of crazy videos on Waymo. Okay, those Waymo vehicles, right? All the likes. But man, you look at that story, you look at Google, and then you look at everything else, and then on top of it, we've been talking about it. These AI videos, man, Google VO3, the internet changed overnight. And Google's the biggest one of that right now. All right, AI videos are everywhere. But Google's the first one that can do all the voices, and that's what's kind of taken over the internet by storm. Whether it's the Sasquatch videos, whether it's whatever it is, right? Amazing videos, man. The world is exciting, but yeah, Google. And you jump over to Google right now, okay, you're talking about a company at $2 trillion. Half the price of NVIDIA, right? Well off some of its peers. You jump over to Amazon. I was putting these valuations in last night in the YouTube Tigers Den. Amazon pushing 2.2, all right? NVIDIA takes the crown away from Microsoft. NVIDIA at almost a 3.77. We'll call it $3.78 trillion right now for NVIDIA shares. And Microsoft up 0.5% this morning at about $100 billion off that mark with 3.68 trillion for Microsoft. Yeah. Then you jump over to Apple to round it out. And Apple, I mean, check it out, right? Apple's not even at $3 trillion right now. And I say not even. Talk about getting lapped, man. Amazon and Microsoft well above Apple at this point. And then you put Amazon in there, Google in there at about $2 trillion, Apple at 3, Microsoft at about 3.7 trillion, NVIDIA $3.8 trillion, up another 50 pennies today. S&P's holding up well. We're up by 18 points right now. All-time highs. Stay tuned, folks. Come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&Ps up by 19 right now. NASDAQ 100 up by 48 points right now. We jump over to the leaders. Microsoft up another 1/3%, hitting 495 this morning. NVIDIA hitting 156. We pull back a bit, still in the positive right now. You jump over to Amazon shares up by 0.6% right now. Google barely in the red. You jump over to Tesla, barely flat this morning. We check in on the dollar right now. 97.235, and we check back on yields. Oof, it's not stopping. Look at this. Higher price, lower yield coming at you right now. 4.26, the yield on the 10-year. You got dollar weakness, and as we talk a little bit of yields, so talk about up in the timeline. Why not just name a new Fed early? Just name them early. Cloud the conversation, yeah. So this may happen by September or October. And so Trump applying pressure on Powell. In recent weeks, the president has toyed with the idea of selecting and announcing the replacement by September or October. Yeah. You got Fed Governor Kevin Warsh, National Economic Council Director Kevin Hassett, and then Treasury Secretary Besson. Now, they don't take over till May, but you're going to have dueling Fed chairs, right? So you usually have a few-month transition period anyway. So it's not like but yeah, that's out there. That's going to cloud it as we have yields dropping, as we have consumer, recreational spending declining. The president calling for lower yields, and he gets to put somebody in that post anyway. in almost 10 months from right now. And folks, it's going to be July in next week, okay? Is it next week? Yeah, it is. Next week. It's going to be July, next Tuesday. They're saying maybe September or October. We already get who the new Fed chair is. Then they'll be talking about it. And the reason why I bring it up, for obvious reasons, but what happens? The market's forward-looking. Once you figure out who that person is and they start putting their ideology out there, even if it's September or October, if the market knows what's coming in May, it's going to get ahead of it at some point. That's only 6 months out from where you are at that point. Yeah. All right, we jump around to some of the equities moving this morning. Micron with their numbers, a little bit of a give back. Yeah. How about that? $1.91 versus $1.60. Revenue, $9.3 billion. They were only looking for $8.9. But guess what? This is what we're dealing with when you got expectations where you trade from $60 to $130. Strong numbers, but you can't trade higher. So McCormick, they're selling a lot of food spices. Yeah, they make 69 cents versus 66, and check out that move on a weekly. Here's your daily, right? Check out that gap. You're taking out everything. You're back into where we were at the beginning of April, all right? That acceleration out of the tariff pause, April 9th. You hit the high, $77. We're bumping up against that area right now. McCormick, you know, their spices, McCormick. Love their spices, some good pepper. We jump over to Penn, the gaming company, entertainment company. The gaming stock, they get an upgrade to market outperform. They're nearing an inflection point after they've been an underperformer. Yeah, I would say so. How about that run, man? What was it? They had Barstool going on at one point, right? They purchased Barstool. That doesn't work out. They sell Barstool back to Portnoy for like $1. I guess at any price you can be a buyer of an equity. At certain prices you can be a buyer. At certain prices you can be a seller. And guess what? This might have reached that price right now. You got Penn up 2.7%. And I have traded this one in the past, but boy, it's been a dog for so long. All right, General Mills was popping around today. Yeah, they get an upgrade too. Be careful of this one, man. Look at this chart. All right, I was looking at this one earlier. And this is where, folks, sometimes it's just very simple, okay? You probably don't need me to tell you when you look at this chart if that's a buy. Longer term basis, man, what are you coming into? Yeah, you're coming into some strength here from March of 2020, okay? That's COVID. That's right back to where we are. That's an ugly looking chart, man, for General Mills. But nonetheless, they get an upgrade to outperform. Yeah, conservative earnings guidance can help the stock find its footing. Well, maybe if you're under-promise, over-deliver, right? Maybe they're under-promising enough. But boy, that is quite a pullback for General Mills. All right, let's talk a little PayPal. You talk about pullbacks, okay? March of 2020, this thing drives to $82. We haven't seen $82. Well, we were there in the beginning of the year. But let's just zoom in on this consolidation we've been getting near the lows. We got a nice bottom at 60. And the reason why I bring up PayPal today, so PayPal's down 1.7% right now. All right, this is an interesting one. So from PayPal, the headline out here, PayPal teams up with the Big 10 and the Big 12 to enable payments to student athletes. Everything's going. Now, they control Venmo as well. PayPal owns Venmo, which is just a behemoth. This is going to allow them to pay athletes. It's not like they needed PayPal to pay them, but guess what? This is where the future is going, man. Okay, electronic payments, it's getting done. I already talk about the rent I collect, the people I pay, whether it's people doing the lawns, the rent, the tenants that I have in places, it's all Venmo or Zelle. That's it. That's what it is right now, everywhere. And so they announced that they have inked a deal, this is PayPal, with the conferences to allow student athletes to receive their compensation through the fintech company's platform. Now, you read this, it's a big marketing ploy here, okay? They don't need an agreement for the schools to be able to pay them, I imagine. Now, that's right after a court settlement, okay? This is coming down the line. What I don't understand for here, it's still such a rigged system, man. The settlement allows individual schools to distribute up to $20.5 million to current athletes over the next year. You know, do you know? Yeah, you do. What some of the coaches alone make at some of these football and basketball programs, right? And the whole program, in terms of the whole athletic department, they're going to be allowed to distribute $20.5 million. That's probably a joke compared to the market value of those players and what they will make for those schools in particular. But nonetheless, the PayPal deal, okay, is going to allow students to receive their compensation through PayPal. Then they don't need this deal. It can already happen. The school just could have done it. Nonetheless, they formalize it, okay? And then they go into how PayPal's mobile payment service, Venmo, is they're going to be a presenting partner for the first ever Big Ten rivalry series. They're going to be an official partner of the Big 12. They're working with the Big 10 and the Big 12. Okay, the Big Ten Conference, 18 schools last August. And look at the schools, right? Maryland, Penn State, Michigan, Ohio State. Folks, you get people on your payment service early in college, they'll never change. I remember early on, I opened up a bank account. I'm trying to remember. I mean, I might still have the same bank account as when I opened in college. It goes, I at least have one of the accounts. One of those student-driven live events to open an account. We'll talk a little bit of PayPal when we come back. We'll look at the chart. Stay tuned, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. S&P is holding on to the gains. We trade a little bit lower, approaching the lows that we had at that 830 economic number when we got those GDP numbers. Right now, S&P's up by 16. Right now, NASDAQ 100 up by 45. NVIDIA holding on to some green territory, up by 55 cents right now. Amazon in the positive as well. You jump back to that PayPal chart. So, down 2% today. But yeah, I found myself checking this thing out recently. And you know what I'm going to do is I'm going to look for a sign of strength on this equity. Okay, because yeah, you better believe it, man. Everybody is so sticky, and it kills me. I can't remember it. But I think I had a checking account, and it might have been Bank of America. No, you know what it was? Here's what it was. I think it's it could very reasonably be the bank account that I still have today, folks. I remember, I believe it was a Wachovia account. And didn't Wells Fargo buy Wachovia, right? I think so. And I still have. Yeah. In December of 2008, so I would have been 28. Check. I think that's the deal. I think I had a Wachovia account from Villanova, and I'm still banking in that same account today. Shame on me because it's Wells Fargo. I should have went somewhere else, right? It's sticky, though. And so pay attention to those PayPal numbers, man. Student athletes, what a way to slide in, right? Like the school needs to make a deal. Like the school needs to make a deal with PayPal somehow for that to happen, but they're going to facilitate it, and nonetheless they do. All right, let's finish up with a little bit of poker. So always remember, folks, in a game where there's high stakes or any stakes, okay, there's a couple cheating allegations going on in the World Series. When you're playing a $50,000 tournament where the winner's walking with $2 million, they're going to do everything they can. And it's just allegations, but it's all soft play. And what happens is you have two gentlemen from China. Of course, China, everything gets political, of course. But they're at the World Series final table. They're accused of soft playing each other, which means one player raises, the other guy folds, either way. And then you have chip dumping occurring at the end of a $1,500 event as a way to make sure that one guy won who received $1 million bonus as part of a WPT promotion. So everybody talks about online. No matter where you are, folks, online poker, in-live poker, keep those spikes up in the market as well. The biggest casino in the world. Folks, thanks so much. Basil Chapman's coming up right now.